Hey everybody, this is Halstead and Andrew McMillan with REH CPA. Today we want to talk about a notice that the IRS just recently put out warning taxpayers of potentially lower tax refunds in the coming tax year. Got Andrew McMillan here with me. Andrew, what can you tell us about that IRS notice?
Yes, there's a few things that the IRS, Congress came out and did to help people during the pandemic, and those things are going away now. So one of the biggest things going away is the stimulus payments, the economic impact payments. In 2020 and 2021, the IRS was sending those economic impact payments to taxpayers, and a lot of people were actually claiming those stimulus payments on their individual tax returns when it was filed. So 2020 and 2021, we were seeing that, generating some refunds for clients, but for 2022, there have been no more economic impact payments, so unfortunately you won't have that as an added refund amount on your tax return this year. Another big one that Congress came out and did, the IRS came out and did, was they allowed taxpayers to deduct charitable contributions even if you took a standard deduction. So for those of you who don't know, like a charitable contribution amount, that's actually an itemized tax deduction. You have to itemize your tax return. But the IRS came out and said, listen, if you take a standard deduction, we're going to allow you to deduct $300 of a charitable contribution if you're single and $600 if you're married. So you could take a standard deduction and still get a little bit of a benefit there to take in some charitable contributions. But unfortunately, we've reverted back to older rules now. So for 2022, this upcoming tax filing season, you can no longer deduct those charitable contributions if you take a standard deduction. Another big change was last year on your 2021 tax filing, the IRS, they enhanced the child tax credit. So the child tax credit traditionally is a $2,000 credit per kid that you have. It's subject to some income limitations and age limitations, but it's generally a $2,000 credit. So on your 2021 tax filing, the IRS increased that. They enhanced it. They said if you have a kid that's less than 6 years old, you can get a $3,600 credit for those kids. So it's an additional $1,600 there. But unfortunately, they've reverted back to the old rules now for this upcoming tax filing season. So you're only going to be looking at a $2,000 credit there. So they've got away with some things that they did during the pandemic to help people get through the pandemic and put more money in taxpayers' pockets. But we're going to be going back to some old rules this year.
Right. So just for you guys out there, just be aware that, if you were used to getting a refund over the past couple of years, that may not happen this year. So I definitely wouldn't spend the money before you get it. Wait until your tax return is prepared. You can do a little bit of tax planning beforehand. We're a little late in the year for it. Tax planning really needs to be done in the fourth quarter. So by the time this video comes out, it'll probably be past January, and it just kind of is what it is. But just be aware that the refunds may be lower than what you're expecting, so just wait till your tax return is prepared before you make any kind of financial commitments. If you need any help with preparation, feel free to give us a call and we'll set you up with an appointment and help you out. Thanks.